Hello and welcome to the Cryptocurrency News channel. This is the TAFA and chart analysis for February 16th, 2022. We have some pretty big developments in the sphere. Let's not get that wrong. The consumer report actually came out today, and we had a very, very strong January. One of the strongest we've had in recent years in terms of buying. What that means is people are still spending a lot of money buying stuff. They say consumer confidence is down, but consumers honestly are not acting like it. Yes, in fact, consumers are acting like they have infinite amounts of money because we didn't really retreat that much from December. And we know that December is one of the best shopping months of the year. Usually January drops off a cliff. This time it really didn't. People are buying more stuff this January than they actually have in the past Januaries. So despite them saying their confidence is down, they're still spending money like it's nothing. So they're not really afraid of running out of money, because if they were afraid of running out of money, they wouldn't be spending like that. So consumers' actions and what they're telling you at the polls are very, very different indeed. So that's kind of like what we have there. So that's actually positive news. I think based on that, I think consumers will be actually willing to make investments in more volatile assets as well. Although they're still like not that high in the risk factor. The stock market actually has been recovering from its losses lately, and Bitcoin has been doing pretty well as well. The Russia situation with our buddy Vlad has kind of taken a reverse. Yesterday, it looked like that they weren't going to attack. I still don't think they're going to attack, but today, U.S., Euro, and Ukraine officials said they didn't really see too much evidence of lessening troops on the border. Now, they didn't see increased troops on the border, so that's a good thing. Russia has also reported that they're moving tanks out of Crimea, which was annexed back in 2014. But they didn't really see too much evidence of that either. But Putin is toning it down. He does indicate that he wants a diplomatic solution. I'm not exactly sure how that'll turn out. But the tension on the Ukraine border, I would say, is like medium right now. It's not like super high, but it's kind of like medium right now. There's a slight chance for invasion, but I don't think that's going to happen. And I think people in the market are pricing in, well, haven't priced in invasion, obviously. I think people in the market are basically expecting nothing to really happen. And I don't think the market's going to take a big dip unless something really does happen. I think the chances of that are actually fairly low for World War III and Russia and Ukraine. Well, World War III was never going to happen, but it was going to be like a localized fight in Ukraine. But however, that is affecting oil prices, which does affect consumer confidence because of inflation. Also, it probably doesn't help with the supply chain issues either, which continue to plague the industry and will probably continue to plague the industry until very late this year. But it will start to resolve. So that the situation is still pretty tense, but people don't expect anything really to happen right now, and the consumer confidence has boosted people a little bit. But the problem is with such consumer spending, we know that the Fed is more likely to see that the economy is pretty strong, and they're not afraid to actually raise it by 50 basis points on the next interest rate hike. Due to this report, I do believe, especially if the March report is strong, I do actually believe they will actually raise it by 50 instead of 25, because if people are still spending money like it's water, essentially they will try to rein that in a little bit just to control inflation, because otherwise if you don't, you're not going to control inflation. Now, I do think the market has priced in a 25 basis point rise. I'm not really sure if it's priced in a 50 basis point rise. I think it's like partially priced it in, but if we do go for 50, I do think we'll retrace a little bit, but not really all that much, because 50, like 0.5%, is really not that big of an interest rate. And by the end of the year, I expect us to be above 1, and I think most analysts do too, so I think that's actually priced in as well. So let's actually look at the technicals. Today has been okay for the most part. It hasn't been great, but it actually has been okay. As you can see, midday, we actually got to 44,003, and we're still at 44,001. So we got out of this like a little bit of a slump from last night, but even at the bottom of the slump, we didn't fall below 43,000, which is still on like the higher plateau than the lowest plateau, which is still good. If you look at the 5-day, we can easily see that we're clearly up from this weekend, and even this weekend, we were still above 40,000. And essentially, this week has actually been up. I expect it to slightly rise up over the next 2 days, unless Russia and Ukraine blow up, which I don't think will happen. Essentially, like I expect it to slightly go up the next a couple of next 2 days into the weekend. I hope to have a bullish weekend. Like I think this weekend right now the prognosis is like neutral to like slightly bullish right now. On the 1 month graph, we're pretty much where we were when we started the month. We're actually a little bit higher from where we actually started the month. Because remember, we had this big tumble on the 20th of January. And then like after that, we just kind of like languished in here for about 15 days or so before coming back up. And even when we were languishing in this thing, we were like slightly up in this period. And now we're like, fully up from around February 4th onward, obviously. And even on the month, if you don't count this giant dip, we're still slightly up on the month. If you really look at it right now, we are actually still slightly up on the month. So realistically, I don't see a reason for us to be too afraid right now. I do think the worst of it is actually over. And that bodes well for us. If you look at the 3 months, just looking at the graph, like this was definitely the lowest point, and we're actually like slightly higher than the plateau before it. So the next point is actually 46,000, followed by slightly over 50,000. I think we're on that route, and you actually have to look at the fact that we took about from November 16th to January 22nd, about 2 months and a week to reach the low point. So if we go by that same recovery rate, and we do like 2 months and a week, we should be around 60,000 by the end of March. Now, obviously, there's no promises for 60,000 by the end of March. I personally think like we'll have to at least wait for mid-March to see if we actually get a lot of real gains, because if Russia doesn't attack by then, they're probably not going to attack, first of all. And also, I want to see how people react from the interest rate gains. But I think like I'm okay with like some short-term buying and a little bit of long-term buying for right now. If you actually look at the technicals, all the oscillators on the daily are actually buy right now. Well, the oscillators are neutral, but the moving averages are buy all the way down to the 50. I kind of agree with that. I actually take like kind of a nuanced approach. I think buying for the next week and a half is fine. And then like buying, if you're buying for like 2 months out, I think it's fine as well. I don't know if I would buy like for about a month out, because that's when those interest rate hikes actually come in, and I don't really know like how people are going to react. You might see like a short-term pullback about a month from now that will last a couple of days because of the interest rates. But if you're buying for 2 months or more, I think it's fine, because after the March rate hikes, I think we'll actually get like kind of a pace what the Fed is actually doing, get a little bit more of what they're actually thinking, and we can price all those things in. I think overall, like people are really looking at more crypto investments. Whales are actually buying more. Institutions are actually buying more. So like I would say short term and longer term for 2 months plus, I think it's a decent buy. Somewhere in the middle, I'm not really so sure. On the weekly, basically the moving average for the 10 has turned to buy, which means short term for the next week or two is actually a buy. Exponential moving average for 20 and 30 are still sell, but there's a decent chance that we can actually like suddenly go above at least the 20 for at least a couple of days. So while I would like hold back on any big gains, I could see us getting past 45,000. So like for the next week and a half, even on the weekly moving average, like I would say it's probably a buy. Like 4 or 5 weeks out, I'm not sure, but then again, 7 or 8 weeks out, or 8 or 9 weeks out, I'm more sure that as we get into the summer, we will actually get a little better in terms of the market. So I would rate that as like 2-3 months out. I definitely rate it as a buy. Whereas like 4 or 5 weeks out, I'm not really sure what to expect there. It's much harder to actually gauge. Like I said, we need about 2 months before all the situations clear up, including the inflation rates and like the situation in Ukraine. After that clears up, I think I can be more confident that we'll be in a bullish market. Right now, it definitely could dip lower based on geopolitical tensions and also what the Fed actually does. But the minutes today were released and they were much of a nothing burger. So the thing is, for the month, the 10 is still on the sell, but we're almost at a buy on the 10. We're at 44,100, and the buy, if we are at 44,500, that would actually be a buy. So we're pretty much neutral on the exponential moving average. We're still below the simple moving average. Everything else is obviously a buy. I think like if this actually turns positive, if we can end like a couple of days above 45,000, I'd be much more comfortable with saying buy for the rest of February. But right now, I'm still going to hold back on that. The oscillators are still pretty much neutral. Like essentially, the oscillators have seen a lot of up and down right now, so they're going to be neutral for all time periods. But essentially, for the EMAs, like for like longer term out to like maybe a year, probably a sell, but like shorter term up to like 2 weeks, probably a buy. And also like, for 3 to 6 months, probably a buy as well at this point. And of course, like 2 years plus is pretty much always a buy for cryptocurrency. So that's kind of what I have for today. We're still waiting for a lot more news, but I would say like outside of like the 4 weeks range, 4 or 5 weeks range with the interest rates, I would say like most of the other time periods are actually on a buy right now. That's of course depending on the geopolitical situation, which could change at any time. So that's the news for today. Let me know what you think. Like and subscribe and hit that bell notifications button. Thank you and have a nice day.